So, should you buy the virus dip in tech stocks on Nasdaq and on other markets, or is the party over and it's time to sell? I will give you my analysis, but first we need to zoom out, look at the bigger picture. First, is the world going under? Is it starting to tilt? No, I don't think so based on what I hear from the actual experts in that field. Also in Sweden, we have deployed this automatic sanitizer that is falling from the sky every day. It's fantastic. And you know my principle. In tech, there are only two outcomes. Some new technologies are going to become a giant success, and they will be so coronavirus or not, while the ones that were just a hyped up bad idea, they will still not make it. Of course, there will be exceptions. Some tech company that was really dependent on an order, and now that they couldn't travel there, it got delayed and they ran out of money and they went bankrupt. Or some company whose supply from China ran out and they couldn't deliver, so they got sued and they go bankrupt. But generally, usually, I don't think that will be the case. Most companies can maneuver through an external obstacle like this, and the outcome will still be the same. So in conclusion, if looking to enter a tech niche, a dip is definitely an opportunity. But is this a dip? Let's find out. Let's look at the Nasdaq Composite Index. Now, I don't trade indices, I trade actual tech assets. But at a time like this, where everything kind of moves together, this is useful. So you could try to look at this. Drop from here, strong reaction on this level, then a bearish engulfing, forming here maybe. But in my opinion, this gives very little. Instead, we need to zoom out, way out. Let's first go back a little bit in history. I'm changing time frame here because the world moved slower. Change was slower in the 70s and 80s than it is today. So basically from 1974, when I was a baby, until year 2000 in September, when I was an adult out managing projects in the world, we had this huge, largely uninterrupted parabolic advance, basically from 70 up to 5,000, and then it broke here, 3,500. Here we continue on weekly candles. Then this parabola definitely broke. After this second top here didn't manage to reach the same height as the previous one, we got a double top here and down it went in the dot-com crash. Going basically from level 5,100 down to 1,100. Then from 2004 until January 2008, we were in this channel. There was one breakout here in 2006, but it came back in. And we dropped here from a high of 2,800 down to a low 1,270 something. Of course, history doesn't always repeat itself, but lo and behold, here we have another channel. For 10 years straight, from 2010 to 2020. And what has changed now? Nothing. Nothing has changed now. We're still in the same channel. If we zoom out, you cannot even see what has moved, what has happened here. So in conclusion, from a fundamental perspective, of course the risk has increased. Of course there will be a business impact if people don't go to work, if people stop traveling, factories aren't delivering on time, people are staying at home scared instead of driving bold business execution. I see three possible strategies here. Some long profits I had through this channel, I took some off the table to see how the next few months will play out. If breaking this channel on the downside would be somewhere here, 7,500, 7,600. I'd definitely take most out. Then if it's coming back in again, like happened here in 2006, okay, just put it back in. So that's clear on the downside protection, but I'm mostly following this as an entry opportunity. If looking to enter, I'd be ready to buy some at support levels, and one was here. Let's go back to the more detailed chart again. You see here that since January 2019 we had some sort of ascending triangle. Upper boundary not exactly at the same place, but remember this is an index, it's not the actual assets that people are after all mostly buying or selling. So more or less, if we zoom out, we can see that it's an ascending triangle of sorts, and that breakout level we actually hit here last week. So that was one support point. The next support point will be the support of this channel. Of course, this is pretty obvious, so a lot of people will reason the same. And also, should it break, it's possible to put a stop loss quite tight below, so we don't need to risk so much if entering there, and it should turn out that it breaks through. And we get instead something like this that happened here in 2017. Then we don't want to be part of that, right? And I'll make sure that I have plenty of cash ready to buy should this become the start of a much deeper dip, like this one here in 2007 to 2009, or the big one here, year 2000 to 2002. And if it doesn't, okay, then we're still in an intact channel, which is good risk return in itself. Now, I said something before, by all means please subscribe and switch on the bell, but you absolutely need to sign up for the email notifications too on larssonacademy.com, link below, or you will always get notified by YouTube days or weeks after everyone else. Their notification system isn't good for time-sensitive content, technical analysis, financial education from Stockholm, Sweden. I hope you found this useful. Happy to be of service to you. Thank you, Larsson out, hej då!